Good morning. It's Monday, May 3rd. I'm Kenny Polcari, and this is Host of the Party. Morning market commentary, everything you need to know. And as you can see today, I'm under the Tiki Hut in West Palm Beach. The sun is up, the sky is blue, the ocean is gorgeous as it smashes against the sand as tide is rolling in. So what do we need to know? What are the things that happen, and what do you need to know to get your day and your week started? It was month end on Friday, April 30th. Stocks declined, not a big deal. We talked about that. In fact, after the performance in April, it made perfect sense that asset managers would reallocate, right? Household income supposedly surges to 21.1%, while spending surged by 4.2%. But you got to ask, was that really real? Global semiconductor shortages are affecting more than just cars, and we'll talk about that in a minute. We can expect further supply chain disruptions and higher prices in the weeks and months ahead. Oil declined on Friday, the dollar advanced, the 10-year held steady at 1.62, which is where it's holding this morning, right? And today, I'm going to serve you up the grilled shrimp on a bed of orzo with lemon-infused feta cheese. It is really a perfect spring and summertime dish and so easy to make. So look, it was Friday, April 30th. Stocks had done very well for the month of April, and so it made perfect sense that as the month came to a close, even though it was not a quarter-ending marking period, it did make sense that asset managers and even retail investors might rebalance and move money around in their portfolio after the performance. And while Friday showed negative across the indexes, right, the Dow lost 185 points. The Dow Transports lost 72 points. The S&P gave back 30. The NASDAQ lost 120. And the Russell gave up 30 points. On balance, the month was very different, right? If you look at the month, the Dow actually gained 2.7%. The Transports gained 5.7%. The S&P gained 5.2%. The NASDAQ gained 5.4%. And the Russell gained 3%. So it makes perfect sense that at month end, when there's a marking period, especially for asset managers and money managers, that they would want to reallocate some of the money. So there's nothing really to get upset or write home about. Look, you know the drill, right? It was better earnings, better macro data, more vaccinations, less mask wearing, more sunshine, and that massive infrastructure program presented by the Bidens. That's also accompanied by this massive tax program, also presented by the Bidens, at a noticeably smaller elected Congress than exists, but that's because they were paying attention to CDC mandates, right? Being respectful of the CDC mandates, and that's why we only saw, a quarter of elected officials on Wednesday evening during the presentation. And while the macroeconomic data was strong on Friday, you really have to ask yourself, personal income up 21.1%. Last month it was down 7.2%, so it was this massive swing. But you have to also remember that the government sent out $3.9 trillion of stimulus payments to Americans across the country. And that was 93% of the total $4.2 trillion increase in March personal income month over month, right? So you have to think for a moment, what if the government didn't send out those stimulus payments? What would that number have looked like had they not, right? Same thing with personal spending, up 4.2%. That's because a lot of people got extra money in their mailbox, thank you to the government. So if we didn't get any stimulus last month, what would those two numbers look like? Which is why I beg the question, was it really real? And then there's more news on the global shortage of semiconductors. And look, we've been talking about this for months now. This isn't a new story, but the fact is it's getting even worse now, right? Because when you think about it, semiconductors do more than just run computers or your telephone, right? You got to think trains and planes and cars and appliances and toys, both adult toys and children's toys, and that's causing a problem for so many, right? Because apparently the demand for anything electronic and chips for anything electronic is so high that it's driving the price of these semis higher, right? And that's going to be a problem because that feeds right into the inflation story. In fact, IHS Markit, which is a research firm, tells us that the index measuring the price of inputs for electronic companies in March soared to the highest recorded level in over 2 decades. That's 20 years, right? The highest reading in 20 years. If you look at the SOX index, which is an index of the leading semiconductor stocks that design, manufacture, sell, and distribute semiconductors, That index is up 11% just this year. It's up 93% in the last 12 months, right? Names in that index include Intel, AMD, Taiwan Semi, AMAC, Qualcomm, and a host of others, right? And that plays right into the ongoing inflation story like we've been talking about. And that is the story that we've all been discussing, yet the Fed has been kind of denying and telling us not to worry. They got it under control. There's no signs of runaway inflation the way many of us feel. But do we really need the Fed to tell us whether or not there's inflation? You and I live it every day. We go to the stores. We understand it. We see what we have to pay for basic essentials, right? Food, energy, housing, and those prices have soared. And look, last month we heard from Coke, Kimberly-Clark, General Mills, Procter & Gamble, all raising prices. And now the semiconductors are going to join that party, so therefore it's only going to fuel that. It's only going to fuel that story more. And don't even go to the home builders, right? It seems to me that new homes are going up in price 10% almost every month as the price of inputs into building a home, whether it's lumber, whether it's wallboard, whether it's shingles, whether it's the appliances that go in the home, are soaring in price month after month. And so therefore the price of new homes is soaring every month, and they're raising prices almost what feels like 10% every month. Look, the cost of building a 200 square foot deck a year ago was $936. The cost to build that same 200 square foot deck today is $3,695. It's a $2,700 increase, or a 300% increase in the price of the lumber and the nails to build that same 200 square foot deck. So yeah, don't worry about it. There's no inflation. But the real issue is the Fed going to be correct in telling us that the spike in inflation is temporary? I mean, they're going to keep saying that. Jay Powell says it every opportunity he gets, that the spike is temporary, that everybody on the Fed agrees it's temporary. They're not worried about it. They're willing to let the economy run hot. But it's this persistent inflation worry that poses the biggest risk to the markets in the weeks and the months ahead. Because if inflation runs too hot, again, we talk about this, if inflation runs too hot and it appears to be spinning out of control, the Fed is going to be forced to move on policy, right? Which means they're going to have to start really talking about tapering. And remember what happens every time they talk about taper, there's a taper tantrum, and they're going to have to talk about raising interest rates well ahead of January 2024, an issue that I've been talking about and I've been saying for the last 3 or 4 months, that they project interest rates to be zero through 2023, taking us to January 2024, which I thought was a huge bet to make, and one that I'm not really sure that anyone's going to be able to keep, because the inflation story is not a simple story to talk about. Over the weekend, we heard from Dallas Fed President Bobby Kaplan, right, who's not a voting member of the FOMC, but he is a Fed president. He tells us that in his mind, there are excessive signs of risk-taking which suggest it is time to consider fewer bond purchases, which translates into taper. Something that runs completely opposite to what Jay Powell and everyone else on the Fed has been telling us, right? But you see how this gets done. And I said this last week. The Fed or the administration or anybody that's looking to gauge the reaction in the market sends out somebody not completely connected. So Bobby Kaplan is a Fed president, so he's connected in that sense. But he doesn't sit on the committee, so he's not a voting member. So he's not connected in that sense. And Bobby goes out there and he makes a comment about what he sees, trying to gauge investor reaction. Will investors react negatively? Will they react benignly? Will they react positively? Will the market sell off? Will the market surge? And so therefore, we'll wait and see. Right now, it doesn't appear that anyone's paying attention to Bobby's comments, because interestingly enough, Treasury Secretary Janet Yellen came out right after those comments took place, saying that people should not be worried about the Biden infrastructure plan creating inflation, because it's going to be spread out over a decade. And so therefore, the pressure on prices will be benign. Well, guess what, Janet? It's almost laughable. We're not talking about infrastructure inflation. We're talking about Fed-induced accommodative and zero interest rate inflation, which is alive and well, and it's here already. Overnight futures are a bit higher. This was after Friday's decline. Futures are just bouncing a little bit today in what appears to be just, it's a new month. It's a new trading month. The macro data continues to be strong. Earnings continue to be strong. It's the same story again. We saw early this morning that the Dow futures are up 173. S&Ps are up about 18. NASDAQ was ahead by about 40, and the Russell's up another 15 points. And it is the final week for earnings, or the beauty pageant, as we call it. And investors anxiously await to see if that trend continues, where 90% of the reporting companies are beating on the top line, the bottom line, and all the lines in between. It's also a big week for macroeconomic data. The big prize this week being on Friday, the non-farm payrolls. Remember, that's a number that everyone pays attention to. Last month, they were expecting 620,000 new jobs to be created. They get 927,000 jobs, well ahead of the expectation. This month, or on Friday's report, they're expecting that in April, we created 1 million new jobs in the month of April, right? We're going to get a preview of that on Wednesday with the ADP employment report, and that's showing a creation of 875,000 new jobs. So one way or the other, that number is due to be strong. The question is it going to be even better than what that expectation is? Today, in terms of macro data, we're going to get IHS Market Manufacturing PMI expected to be 60.7. You're going to get ISM Manufacturing PMI expected to be 65. Both very, very strong numbers, well into expansionary territory. In addition, you're going to get construction spending of plus 1.7%. This morning, European markets were all higher. The UK is closed for the May Day holiday. German retail sales were up, and they're also investors. They're also monitoring the end of their earnings season to see how their earnings season sent. And those markets were up broadly, about 0.5%, a third to 0.5% across the board. On Friday, the dollar index managed to claw its way back up and through resistance, which was 91.04, ending the day at 91.28. And this morning it's off just 8 cents, but it is still holding above the support level at 91.16. The dollar, Oil came under pressure on Friday, partly because of a rising dollar, right? Oil sold off 2% or $1.43, partly because of the strength of the dollar, but also because oil performed beautifully as well over the month of April, rising 10%. And so therefore there was that end of the month rebalancing from traders there. Taking some money off the table makes perfect sense, but no reason to worry because oil still ended well within the 60-65 range at 63.07. So there's no real reason to panic there. This morning, Bitcoin is trading at 58,700, Ethereum is trading at 3,200, and Dogecoin is trading at 39 cents. Look, the S&P closed at 4181 on Friday, right down 30 points or 0.7%. Because of the month-end repricing, not for any other reason, and because really the beautiful performance that it gave in the month of April. Again, I'm not going to lie, though. It does feel a bit toppy to me, right? It feels a bit stretched to me, but it is a new month, and so much can happen, right? Strong macro data today, continued good earnings, more talk of how the Fed's got everything under control, nothing to worry about. All that could certainly point to brighter days ahead. Right? But I'd like to see it, as you know, back off. I'd like to see them shake the branches a little bit. Short-term support is going to be at 41.40, which is only down 1% from here. So that's nothing to get worried about. But I'd rather see, a 7 to 9% pullback and really shake the branches to see who falls out. But I don't think at the moment that that's in the cards anytime soon. But it could be over the next couple of months as we move into summer. Look, remember the broad channel remains 39.60, 40.40 on the S&P, although 4,200 does appear at least to be giving it a little bit of a hard time at the moment. Even though we pierced up and through it, we came right back underneath it. Let's see what happens today and as the week begins. Now remember, you can text the word INVEST to 21,000 to get my digital business card. Feel free to download it, reach out to me. I'm happy to talk to you about about wealth management planning options or anything else you'd like to talk about in the markets. So let's talk about what's today for dinner. It's grilled shrimp on a bed of orzo with lemon-infused feta. It's a simple dish to make, and it's so great. It's a spring-summer dish. You can, eat it from now until really late August. For this, you need 2 dozen large shrimp, cleaned and deveined, right? No tails on them. You want to get them all cleaned and deveined. You want 10 or 12 skewers, and if you use the wooden skewers, you got to soak them in water for a good 20 minutes. If you use the metal skewers, don't worry about it. You need olive oil, oregano, fresh lemon juice. You need minced garlic. Salt and pepper, feta cheese, and some orzo, right? You know what orzo is? Orzo is a rice. It's a pasta, but it looks like rice. It's a rice-shaped pasta, but it's used in many types of pasta salads and even in soups. And in this case, we're going to use it for the bed that we make for the shrimp, right? Now, you want to take the shrimps, you want to pierce them onto the skewers. So just put, 3 or 4 shrimps onto the skewers, whatever you want to do. You can season with salt and pepper, set aside. In a separate bowl, you now want to mix all the ingredients, the olive oil, the garlic, the oregano, lemon juice, salt and pepper as well. Shake it well, and then pour half of that over all the shrimp, right? Put the shrimp either on a platter or in a bowl and pour half of that marinade over the shrimp, put it in the fridge and let it marinate for, half an hour, 40 minutes, however long you really want. When you're ready, you're going to heat the grill up, make it really nice and hot, brush the grill, clean the rack, make sure there's, no bits of meat or anything on there from what you grilled the last time. Get it all nice and clean. Bring a pot of salted water to a rolling boil, add the orzo, let the orzo cook for about 6 or 8 minutes. Test it because, it goes from being a little bit hard to being soft very quickly, so don't let it any more than 8 minutes and it's going to be too much, it's going to be too mushy, right? You want to keep it a little bit al dente, right? So now you want to strain the pasta, and then you want to mix it with crumpled feta cheese, right? So crumple the feta cheese, put it in there while the pasta is hot, mix the cheese and the feta together. Now take the other half of the marinade that you made, that you didn't use, that's still in the bottle and add it to the orzo, right? Mix it all together so that the orzo gets the flavor of the marinade as well as the feta cheese. Lay that out on a big family style plate, make a nice bed of the orzo. Now take your grilled shrimp on the skewers, put them on the grill, grill them up. Very quickly, because they turn pink very quickly. You don't want to overcook them because then they'll get tough. Once they're cooked, you take the skewers off the grill and place the skewers just right on top of the bed of orzo. Right, don't take the shrimp off. Just leave them on the skewers and let people take the skewers. It's a great way to do a family style dinner. Right, you could just, if you make enough of it, you just put it out there and people can walk by, take a skewer, take a scoop of the orzo. It's really great. It's simple to make. Have a nice glass of wine available. A chilled white always works well. You don't want to drink a heavy red wine with this dish. You want a chilled white or even rosé, because you know what I think, it's summertime. Rosé all day. Have a great day. Take good care, and I'll see you in the morning.